So it says I am live and it says excellent. So I don't know if you are watching right now. We have 2 viewers and it says I am live. So please, if you are looking at, if you are watching, please say hi. At least I will know that you are here. Jocelyn or Advanced Trader or anyone else who is here. My stream. Oh, now it's working. Thank you, Jocelyn. Okay, that's good. That's good. Thank you very much. Okay. So we can begin. We can begin our session. So for today, the subject is which is better, trading or investing? And I want to speak about this subject because a lot of you guys and other guys who are watching later. Oh, Tony, how are you? You say, yes, I finally made it to 1. Okay. Yes, we have okay, that's good, Tony. I have just a problem with making this new live work because YouTube always change things. It was excellent. I don't know why they are doing some changes that it is useless. Each time they present us with a new layout, a new thing, but there is nothing good new that it is good. Before it was better. But we have no choice, so we should go with the way they do. So, guys, I can begin right now. Our subject today is which is better, trading or investing. I know a lot of people, they ask, what's... we see some investors, they have a lot of money. And we see that some traders, most of the traders, they say they fail. So what is the deal with these two things? So, Tamba Nair say, swing trading is the best for me. Yes, it is excellent because it's in the middle. It's not investing and it is not trading. And you can make money. You can make money. If you know what you are doing, you can make money with whatever you do. But swing trading, you should not trade a lot. It means it is not like day trading. Day trading, you can do whatever day trades you want in the day. Most of the people, they do day trading a lot. You find them in futures. The reason for that, futures, you bring just a little money, 2,000, 3,000, 4,000, and you buy a contract, 1 contract or 2, and because it is leveraged, you can make a lot of money if you know how to trade. That's why most of the well-known professional traders, they go to futures, because with little money you can make a lot of money. But since they have a lot of money, they can make a lot of make money, and they are just waiting for some signals, and they can make money as they do. So, what about now if we speak about what's the difference trading and investing? First, it is time. In investing, in order to make money, you need time. Time, because sometimes the company that you choose is small or medium. Okay? So in order to make money, Hello, Fabian. Fabian, hello. How are you? So, in order to make money, you need time. Warren Buffett, who is, let's say, the best known investor, he said that you should think about 20 years investing. Now, why he said 20 years? Why he doesn't say 1 year, 2 years, 5 years? He just because he knows that companies develop slowly, especially insurance, banks, financials, because he is not looking at technology stocks or drug companies, or lately he changed his mind. But before he always like banks and insurance. That's why you find a lot of stuff. And he likes retail because he understands these kind of companies and how do they work. Okay, like for example, he bought Coca-Cola. He knows that it is making. That's why a lot of people who write about investing, they try just to follow what he likes, and they write books about what he likes, and they say this is investing. But investing is a broad thing. You can have different strategies to invest. It is not one way. Like trading, it is not one way. But there are something that it is always you should do. Okay? In investing, for example, you need time. This is we have spoken about. Time. If you find a company you want to invest, you think about 20 years. Now, if it is technology stock or drug stock company or something that it is not financials, real estate or insurance, so here what you should do, you should think less time. Let's say 5 years. Okay? Let's say 5 years. You buy, for example, Facebook. You think that 5 years you'll see what does it do. Okay? For example, Apple. You know, this technology and this thing, you need just some time, not very, very large time. Okay? Google, Amazon, all these are internet thing, and you can make a lot of money if you succeed. Now, there is no guarantee that you succeed in any company. Whatever people they say to you, there is no guarantee. That's why investing, you should risk as trading. Some people they say, oh, investing, there is no risk. By time you make money. No, this is not true. This is not true. It's not just you buy a company, you wait 5 years, 10 years, and then you make money. Sometimes the company that you bought will the stock price will go down. Like when we see, I give you an example of not last year, of 2018. When I talk about General Electric. General Electric is one of the oldest companies in America, and it was with Dow Jones for 110 years. Now, at the beginning of 2018, when I was interested in the whole market and the indexes, I see that GE is going down in the price. And I told you, and I give you alerts. If you go to 2018, in February, March, April, I give you alerts when I speak about the 30 stocks in Dow Jones. I say this stock, this company is having a problem. For me, I have never bought this company, and I don't know the fundamentals. But for me, the price gives me everything I need. Although it is a company that it is that I didn't see the fundamentals, but the price tells you a lot of things. Okay, the price is something that you should never ignore in anything, in investing, in trading, in anything, real estate. The price is everything. Now, so we say that investing, you need to check the time. It means you need time. And if you are right, 2 years, 3 years, 4 years, you should see where you are going. Does your company that you invest in, is it going good? Do you make some money each year? It means 1 year, 2 years, 3 years. Are you making some money? Like the market or something like that. Sometimes it's 7%, sometimes it is 15%, sometimes it is 20%, sometimes it is minus 5% or 10% like in 2018. Sometimes it is minus 50% like 2008. So it depends. It depends on the years, it depends on the companies that you are invested in. Okay? But sometimes in good years, like last year, for example, it was a good year. Okay? Yes, it was good. But you find some companies that they collapse. They are very old companies and they collapse. So what does it mean? It means that your investment is doing bad. If Dow Jones is going up, S&P 500 is going up, everything is going up, but your company is going down. So what does it mean? It means that your company or the index that your company is having problems. Yes, advanced trader said price is very important to follow the price and pattern. No, here, advanced trader, I'm not speaking here about the price exactly. It means I'm speaking about years. You invest in the stock, you should look at the price, which is correct. Yes, you are correct. It means price gives you alerts. It gives you a precious information. When you see a company is going down, look at the fundamentals. What's going on? But here I'm not talking about IPOs. IPOs, it means the companies that they go in the stock market. They go in the stock market for the first time. So sometimes they go down, although they are good, but they go down because the investors are frustrated and they don't buy until they wait 1 year, 2 years, 3 years until they see the quarters. Because understand, I will tell you this because a lot of people, they don't know. A company that it is a private, like Geico, for example. Geico is owned by Warren Buffett, which is an insurance company. Almost of you guys, when you see Geico, you see this lizard, and you see it's very, very known, and they have a very powerful marketing. Now, Geico is private. You can't buy it because Warren Buffett has bought it all, and it is not in the stock market. It means if you want to buy Geico shares, you don't find it. Why? It's private. Now, a company, when it is private, they don't give too much information to the people. They don't. It's not like in public. Public company, they are obliged to give, to show what they are doing, how much money they make. If insiders, like executives, if they buy more shares, if they sell more shares. Okay? So you see that? So all this is public. If you want to know who are the insiders. For example, let's say you want to know Facebook. You just go to Facebook fundamentals, you find the company, and they will give you who are the shareholders. It means who are the big buyers. Which broker, which people, which organizations, which institutions have bought a lot from Facebook. They give by percentage. For example, they say this broker has bought 1% of Facebook. The other one, 5%. This mutual fund has bought 15%. Okay? From the whole company. So it's big. It's 10 billion, 15 million, 15 billion, 100 billion. So they bought a lot. So you know who are the owners. Now, this is what we call shareholders. These are the big shareholders. Now, we are small shareholders. What does it mean? It means if you buy 100 or 500 shares or 1,000 shares, this is small. So you are not having a percentage in the company. You have 0.0000000, 10 0 or 30 0, and then 1. It means you are not buying anything. Your money is little. Okay? So, as I told you, you need time, you need to check the price, to check the fundamentals before you select a company. Why do you choose this company? What makes you decide to invest for many years for this company? Okay? So this is so important. It's not because of an analyst. If you are following analysts, they will ruin you. Because analysts, when they give you an advice, they are paid to show you the good things in the company, but they don't show you the bad things. Okay? And they show you the things that it is good, but they don't show you the things that are bad, so you get misinformed. And if you take decisions because of these guys, believe it or not, you will ruin yourself. You will lose your shirt in one of these companies. That's why it's your responsibility to search for company by yourself. It's your responsibility. It's not a responsibility of someone else. It's you. Okay? Now, for this are some criteria that I develop here, and I have made I think two ebooks or three ebooks about investing, about dividend investing, because most of the people, when they invest for dividend. Okay? Dividend, it is a cash amount from the price. They took it from the price, from your money, and they give it aside in order that you pay tax. This is the trick, because a lot of people, they don't know even what is a dividend. They think a dividend. If you see the definition, if you go to see what is a dividend, what do they say to you on Google, Wikipedia, or anything else? They say it is a cash money from the company profits. This is not true. This is not true. It's not from the company. It's from the price. The price, because they cut. Let's say a company gives you 2% a year. Do you know that this 2%, they took it from the price? If the stock is 100, they put it to $98. It means they took 2 from the price. But they don't give you money from the company itself. Like executives, when they take money, or if you are a worker, if you have a 401k, they give you profits. These are the real profits of the company. Although you don't have any share, they give you profits because you are working for them. The executives are the guys who take a lot of profits. For example, if I'm an executive of a company, let's say he is making $1 million. Just an example, okay? But in the year, they can give him, this is his salary, $1 million. But they can give him $1 million or $2 million of profits. So you understand that? Profits. This is from the company money, not from the stock market. So understand that. Now, so these are things you should look in the investing, not to be mistaken. And when you invest in a company, there is no guarantee that you will make money. Understand that. Sometimes you choose a company, especially those that are IPOs. Be careful. Be careful when you buy these IPOs. Sometimes they go so wild, you make a lot of money, but sometimes they ruin you. Okay? Sometimes they begin with $10. After 1 year, it is $1. So you lose 90% of your money. Because some other people, they say, oh, this company, technology company or drug company, it is the best, and it created new drugs, and it will be, and this and this and that. Okay? It means they give you, I'm not saying they give you false information, but they give you something that it is in the future. It means, as we said, they sell you fish in the sea. They say, here is the sea, there are 1 ton of fish, so just give me the money and it is there. Okay? This is what they say in general. But people, they don't understand what the analysts are saying. You can watch analysts, but you should never rely on them when you make a decision. When you make a decision, you don't rely on analysis. I'm telling you. Okay? Because understand they are paid, and when they are paid, it means they give the past always. But when they talk about the future, they make it so good, and you think that they know better than you. They don't know better than you, because if you go to fundamentals, you find it. Any stupid person, you go to fundamentals, you see if it has a debt, a very large loans, the cash flow is low, it's not good, the price is going down. How can you buy this company? And you see that in competition, it is the worst company in America. Okay? So you should, before you buy, you should make sure you understand what this company do. Competition, which is a very big thing. Competition, what makes the companies excellent or what makes them collapse. Do you know that in America, each year we have hundreds to thousands of companies, they collapse and they go bankrupt. Do you know what does it mean, bankrupt? Some, they are big names. JCPenney was one of the biggest retails in America, but they collapse and they go bankruptcy. Sears, I had made videos 3 years or 4 years ago when they go down, and I told you that they are going to maybe to bankruptcy, and it is yes, they go to bankruptcy. And the people, they say, oh no, I know JCPenney is an excellent company, it's good, I invest in it. No, you should not take things easy. You should be smart. Look at the fundamentals, see what the analysts say. Yes, you can see, but don't rely on them. You can study the company, compare companies by each other, because it is your money. You are staying 5 years, 10 years, 20 years, 30 years. You should be sure that you make a good decision. Okay? Not just to buy any company, a new company, and you say, oh, this company is good, just buy it. Okay? So that is a big problem you do. And then, after 20 years, 30 years, if people are making money and you are losing money by investing because you choose the worst companies, that is too bad. Okay? Now, I will tell you something about investing that some of the people, they don't know. To make good money from investment, you should never buy indexes or buy mutual funds. Do you understand why? For example, if you buy a mutual fund, like in 401k, why in 401k they oblige you to buy mutual funds in your if you open your 401k, you go to your 401k account, or if you have similar account in investing, like the company investing, you will notice that all your money is in mutual funds. Now, do you know why? Because they take fees. Now, when you buy a stock, you don't pay fees. For example, if you go now and you buy Apple or Facebook or Twitter, you are not going to pay fees for the broker. It's free. You stay 20 years, you pay no penny. But mutual fund, when you buy mutual funds in your 401k, what does it mean? It means that you are buying a collection of stocks, and there are fees. Mutual fund manager, they have fees, management fees and the other kind of fees. So instead, for example, if the market makes, let's say, makes 6%, the market 6%. If mutual funds take 3%, so how much you make? You make 3% only, okay? But the market have made 6, just in general market. Stocks have made, for example, 20% or 15%, if you choose some stocks. So, and inflation 3% a year. It means your money is down 3%. So you end up making no money in real. You are not making any money. But you think they show it to you in numbers that you have made money. And this is why most of the 401k, they give you either bonds or mutual funds. Some companies, they ask you, you can buy their own stock. If the company is good, it's a very good choice. You can buy some with the company if the company is good that you are working in, and if the stock is going up. So you can invest some money there because it's a good choice. Your company is $50. After 5 years, it can go to 100, 150, 200. So you will be making more money from your company than from your 401k. So you understand that. Now, for investing, there are other things we speak always about investing. Is dividend. A lot of people, they get misinformed about dividend. Dividend, when you are paid dividend, it is from the stock. It means it is cut from the stock, not from the company money. Second, you will pay tax. This is why the companies, they give dividend, because if they don't give dividend, okay, the people will make money each year and they don't pay tax. Because you pay tax when you sell. So, if you don't sell, what does it mean? It means you don't pay tax. And the government wants you, the IRS wants you to pay tax. That's why they create this dividend. Dividend, when it is taken from the price, you have to pay tax. So, in order to make a big investment, you should have a big account to make dividend, what we call passive income. But you need bigger account. Smaller accounts, you can't make money. Yes, your money is growing, good, excellent. But for dividend, you can't make money from dividend. But you can make money from stock appreciation. Now, what does it mean, stock appreciation? It means you bought stocks at $20. Next year, it is $30. Okay? So you are making 50%. This 50% that you make is a price appreciation. It means some profits that you have made. But if you are doing an investment, the IRS cannot take your money although you made profit. They can't. The only thing they can take your money is when you have dividend. So when they pay you dividend, they will ask you money later. Okay? So all of these is about investing. So let's see our guys. I know, sorry guys, I try to develop something. Investing first, then I will see some questions. Then we answer all these questions, and then when we finish with investing, we go to trading. Okay? Let's see what the guys are saying. And I understand a lot of people, they have opinions, and I appreciate your opinions, and you share your opinion. Very good. And there is one guy who come. I think who came last week or the other week, and he was arguing with me about gold and silver, and he wrote to me by email, and explained to him at that time he has never replied back. He was so wrong that he find himself losing money, and showed him how he lose money, and I showed him what is his investment and which time, and I showed him that he lost money, not make money from gold and silver. So he didn't reply. He probably one time or two or three, and then when I explained to him, he didn't reply, and I think he didn't come again because it was a very bad thing for him. Because he lost money, and he thought because understand, guys, when someone talks to you about gold, silver, and buy coins and buy the thing, there are two things about this gold and silver. Because we are in investing, I want to speak about this before we answer the questions. I know some of you guys have questions like related to gold and silver. Why you see all the people speak about? Because these things doesn't sell well. That's why they push. They say to you, for example, gold never lose the value, but paper money lose. I say, okay, I will give you an example showing you that gold loses value and our money is making good value. Okay, an example. Because when I give this example, a lot of people, they stop talking to me, because if someone argues, he should have some numbers. For example, in 2011, in April, gold was 1884 per ounce, troy ounce, which is about 31 grams of gold. You get 1884. Now, can you go now in 2020, see how much gold it is? It is 1300. So, is our money is better than gold, or gold is better than our money? You will discover that gold has lost a lot of money. It means a lot of value. For me now, with 1300, I buy 1 ounce and a half. But in 2011, I buy only 1 ounce. Troy ounce. You see that? People who buy, for example, their retirement, they buy gold and silver. Understand that when you put it physical in the bank, they will charge you for protection. It means you put 100,000, 200,000 of gold metals or coins. They charge you every year for putting this into the bank. They charge you. Second, if you want to sell, it's not easy to sell gold, because they want you to sell it cheaper in the market that the people buy. So you end up losing money because of this stuff. And if you want all your money, for example, you want all your money, you want to buy a business, or you want to do, let's say, what is it called? To buy a business, or to buy a house, or to buy land, or to go to a long vacation all over the world, whatever you want to do with your money. But you get stuck because you can't sell. And the only way you sell is when you make it so cheap that the people will buy it and sell it again. Those guys who trade. That's why I told you, trading is not investing. But if you trade in gold, yes, it's good. Gold, silver, especially in the stock market. You don't have to buy gold, physical gold or coins, but you can buy companies. Companies in gold, they're going up. And you can make money without even buying gold in physical. So, there is another thing. People who trade or invest, they invest in coins that are collectibles. Maybe you guys have an idea about collectibles. about coins. I search and I follow collectibles a long time ago, and I am always searching for coins. And I have made some videos. If you go to my channel, you find me finding silver in 500 bucks of $half. You can do that. You can put in my channel $half silver. You will find videos explaining to you how you can find silver for free. Okay? So if you find some coins and then you sell them in the market, you make money. Because if you find, for example, $1 that it is 90% silver, you can sell it for $7, $8, $9. If it is 40% silver, you can sell it for $3, $4, or $5, depending on the coin. So you understand that? And some people, when they buy collectibles, it means those that have value. Understand that some pennies are $100,000. I know that sometimes you don't believe that a penny could be worth $100,000, and you can find it, but it is rare, but you can find it. This is how the people, what they are doing. They are looking for collectibles, something that if it stays 10 years, 20 years, 30 years, it becomes more rare because the people, they don't have it. Okay? So this is the kind of investing the big guys do. They buy these things that can go high in value in the future. You buy it with, you buy a coin with $1,000, but after 5 years it becomes 5,000 or 10,000, depending on the market, because the market will change. It's just a value. Okay? Now, so if you go to YouTube and you search for these guys who are speaking about invest in gold, invest in coins, invest in copper, I don't say they are stupid, but they don't really understand the value. They don't understand the price. And there is a problem. If you don't understand the price, you will never make any investment or any trading correctly. You should understand how these things work. Anything is different. If you are going to go to gold and silver, there are many ways to buy. It's not coins, or you can you can buy companies, like in stock market. You go to gold index, and you see the companies of gold. You can see the companies of silver, of platinum, of uranium, any metal that it is precious, diamond, whatever is the precious metal. You find stocks. These stocks are real companies. They are searching for gold in South Africa, in America, in Alaska, in every country. But they are in our stock market. Okay? Since they are in our stock market, you can invest in them, and you can even trade them. But now I'm speaking only about investing, and when we finish investing, we will go to trading. So you understand that? So there are a lot of things you should understand before you do anything. Now when you understand, and then you can proceed and try. We have real estate also. A lot of people, they talk, okay, just come buy real estate, $10,000, you buy a house. And then you begin to make rent. And yes, it is good, but sometimes, if the market is bad, you will lose all what you have. Like what happened in 2008, which is banks and real estate, because they are related. Because real estate always, they have loans from the bank. For example, you want to buy a house, real estate. It means you buy a house, or you buy apartment, or you buy, and you want to invest, to rent it. So this is kind of investment, passive income. But what if you don't find a renter for 1 month, 2, 3 months, or 6 months? And you don't have a lot of money to cover that. So you lose it. The bank will take your house after you pay for 10 years or 15 years or 20 years, and they will take it from you. This is what happened in 2008. All most of the people, they work in real estate, they were making a lot of money before 2008. But when 2008 comes, most of the people, they were jobless. I'm telling you, people, they were in the street who are making millions, but they were in the street because the market was so good, and then it changes to be bad. People lose their job, so he can't rent. He can't rent, for example, an apartment with 1,500. He was looking for an apartment which is 500 because he lost his job. So those apartments that are 1,500, no one wants them because there is no jobs. What will happen to the guys who own? They will lose their properties. Okay? So this is just to show you some of the things that I'm always talking about. So anything you want to put your nose in, you want to invest, do not follow just people like this and just they ask you, just do this. I will tell you a funny thing that happened here. Sometimes they send you a letter. They say, there is a free lunch. There is a strategy to make money from real estate. So just come to the hotel and you have a free lunch. I think most of you guys, maybe you have heard about this. I have gone to some of those. Just for me, it's just to discover what the people are telling. What are they telling people? Okay, so I go to this meeting. It's in a hotel, in an excellent hotel. They give you food, and before 1 hour, they begin to brainwash your brain. They begin to tell you that you will become a millionaire just by these things, and then you become a millionaire. You will visit all. They begin to show you where you want to visit. It means your money. They will show you how to spend your money, and this is the stupidest thing someone will tell you. But they begin with this, and this strategy, it is to hypnotize people. So be careful, guys. If you have gone to this kind of thing, try to put something, or you go with your wife, or you go with someone, and ask yourself before you go, never sign anything, never buy anything, never sign any paper. Because what they do, they hypnotize the people. They show them that you will become millionaire, you will become free just by doing this. Now, what is this thing? They buy what we call liens. I don't know if you have heard about this word, LIEN. It means a lot of people, when they can't pay their mortgage, it goes to foreclosures. So the bank will sell these liens, okay, to people. They sell it very cheap, and if the other guys they don't give you money, you can take their property for cheap. But the problem is that some properties are worthless, like a land in a swamp, or a land that you can use for nothing, or a land that it is in the desert or in the top of the mountain. It means it is worthless. Now, when you sign and when you buy these liens, okay, no one will want them, so they become yours. Now, when they become yours, because of the law, you are obliged to pay tax. And then you got caught by the government, by the IRS. And the IRS will ask you, okay, you own this land. It is a swamp. It is just a wetland. Let's say where we have a lot of water, but this land is near these waters, so you can do nothing with this land. But the government asks you, or the IRS asks you to pay tax. If you don't pay, they will seize your house, your car, or they put you in prison. You see that? So before you do anything, never sign anything when you go to a meeting with these guys. I find old people, they sign. They don't know. They are 70, 76, 80. People are like old people. They don't know what they are doing. But they convince them they could have money. And they know they have some money, 401k and the other stuff. So they know they have money. But these people, they show them that they become millionaires, for example. He has $500,000 in his account, or 200,000. And they say to him, if you do what we ask you, you become, let's say, a millionaire in a few years. If you follow us and you buy this stuff. Okay? Now, if you want to do real estate, just do it in the stock market. You can buy companies that they do real estate, and if the stock goes up, you make money. If they give you dividends, you make money. It's better. If you want to get rid of it, you sell your shares. So you are free, because the stock market is a free market. You buy, you sell. Even if you are mistaken, you sell very quick. But if you have a property you want to sell and the market is bad, they give you a bad bid. They will never give you something good. So you are obliged either to sell it with a loss, or to begin to pay for your mortgage, because you don't own this property. So understand what you are doing before doing anything in investing. And this is my suggestion, my opinion. And some people are foolish and they do stuff and then they got caught. When you get caught in a bad investment, you just lose your own money. Okay? So I will stop here, and then I can begin to answer questions and to see what the guys are saying. Whenever we finish, we go to trading. Okay, so just let me see some coffee. Okay. So Wiseman, thank you, Wiseman, for your statement. Say investing, it's important not to marry the stocks, only long-term relationship and see how things work. Yes, how things go. Yes, it's very good. It means you invest few years and you see if the company is losing money, the stock. How do you know? If first you can check the quarterly earning news. The company that loses money, it should be continuous. And you see the prices going down and down and down. I have given you a proof of a very good example in 2018. And before, in 2017, when I speak about JCPenney, Sears, and General Electric. These companies, General Electric is not going bankrupt, but it lost a lot of money. It's not anymore in the Dow Jones because it becomes smaller. It was one of the 30 biggest companies in the world, in America. One of the biggest, but it lost 50% of its stock. So the company shrink and it becomes half. So the management of the Dow Jones, they kick this company out and they bring another company. You see that? Now, JCPenney, they go bankrupt with Sears. I have spoken a lot about them in many years. But when they were good, I trade them a lot. Especially Sears. Sears was a stock that it is $40. It goes to $195 in 1 year or two. So I was always trading this stock. JCPenney also. JCPenney, always I was trading this stock. But when they begin to go down, I forgot them because there is no more good to buy. Okay? So let's continue. Advanced Trader said, press release. Yes, sometimes when we have press release, they give you information, but you should see always the stock, if it is good or bad. Okay. Hello, Smith Patel. Thank you very much for coming. So Advanced Trader has written a lot, so I will begin to read very quick and not to lose time. So Tony said, so if the company is going down over time, it means that it has problems, or how much would it have to go down to know it has a problem? Now Tony, you have given me a question, a very excellent question. Now, don't look at the percentage, but look at the whole market, what it is doing, and the index that it is in. For example, let's say your company is a biotechnology company, which is an industry. Biotechnology industry, I will show you, Tony, right now, since your question is very, very excellent. So I will show you. I will show you right now information. At least you will know. Okay. So guys, just wait seconds. You will see the chart, because I want you to see, and then we can go and check. When I talk, the video is so slow. It means I talk, I show you something, but the other things are coming later. So this is the chart. Okay. So here I will show you how to look from this. For example, you go down and you go to, let's say I go to drugs sector. I will show you a very clear thing how to show. Now look in the middle here. We have drugs, which is a sector. It has 1, 2, 3, 4, 5, 6, 7 industries. In each industry, we have companies, the same companies. They are called biotechnology. So what you should do, you should click biotechnology. Now when you click, this is the index beginning with MG516. This is what we call the industry. Let me yes. Let me just show you. So the drugs is the sector, as we have seen. Biotechnology, it is industry. So this company, this is the index. Now, let me show you. What does this index do? Is it going up or down? You say yes, it's going down. It's going up since October 4th. There is a big trend in this index. So let's see the other companies. Are they doing the same or are doing the opposite? Okay. So by this, I will explain to you. So it's going up. It's a trend. The company is doing good here. Doing good here. Now this, it has a gap up. But look here. Look here. Let me see. Okay. Look at this example, for example, BIIB. It has a gap up, as you can see. Let me take this thing. But do you have here a trend? There is no trend. There is only the gap up and there is nothing here. But if you see the index is going. All is going up. So this company, which is BIIB, is not doing as the market. It doesn't lose money because there is a gap up, but it didn't make money through the trend. Now let's see. This one is good. This is good. I will give you examples when it's not too good. Now when you see like this, it means this company has been sold. SHPG. There is no chart. Shire Pharma Group place ads or something. It's sold. There is no chart. IQV little bit. Charles River good. This is good. This is good little bit. This is good. This is the same as the other one. This is little. Now this is sold. CELG, because here there is no price, so it is sold. Now I will go down and will show you some companies that they do bad. Now this company, for example, okay, let's example. It's called the Bluebird Bio. Now what do you remark? You remark that this company is going into a long downtrend. Now what does the index do? See the difference? You see the difference between this blue going down and this index is going up? You see that? It means that this company is not doing good. Now let's give you other examples and then we stop. It's doing a good, little bit good, not so much. This is not doing anything. This is going bad. Doing bad. Let me give you another example that it is clear that it is going down, not doing anything. Yes, like this one also. Look here, look. Guys, ANIK. So, see the downtrend, how bad it is. The stock was 75, now it is 45. So, this company is losing money. Now, if you compare this company, which is ANIK, with the index, you see that there is a big difference. The biotechnology industry is going up, and this company is going down. Okay? So did you get the idea, Tony? Okay? So hope, Tony, you get the idea. And since you are my student, please send me an email. We can go into details about this. Okay? I will. If you are in the subscription right now, next week I will make you a video, and you can give me your investment, and I will give you a review, my review. Okay? I will not go to go to fundamentals, because for me, I know just by looking at the price, I will know that there is a problem. So for you go to, for example, you go to fundamentals, you find that there is real problem. Okay? A real problem of the earnings quarters. It's going down, for example. You find the profits are going down. You find they have more loans, more debts. You will find that there is a problem. But don't take a decision without. You can ask me. Now, for me, I'm just going to give you my opinion. But the idea on, for example, how to. It means how to decide. It should be your decision. And I don't know how many years you have been with this. Have you made money before? Yes or no? Or you bought it and it's going down and you hold it and you are losing a lot of money. It depends if you have other stocks that you are investing in, or are you investing in one stock. So this, it has a lot of implications. Okay? Thank you, Tony, for your question. You can send me an email. And I will explain more and more. Advanced Trader said, many times I was on the stock and get upgrade and price spike. Yes, but this upgrade and downgrade, it is just the news. It's just the news. Sometimes the news, it is in one time. But if it continues to go up, this is very good for you. But this, you will never know. You will never know. They upgrade it. It means you will never know that they will upgrade it next month, for example, and you buy it today, and then they upgrade it and you make money. So this is like earning news. So you will never know. If it is like a gap up or gap down. You will never know. So don't rely on things that are not reliable. In terms of probabilities, everything can happen. Everything can happen. You are in a stock, bad news, it collapses. This is news. You can do nothing to it, and you can't predict it. But earning news, you have the choice to stay or to exit the trade. For me, I always give my opinion to my students who are in my subscription when we see stocks, and I say you should know if you decide to stay or to exit. If you stay, understand that you have a big risk. But you can make money, yes, but you can lose also a lot of money. So are you okay? Do it. If you aren't okay, just sell before the earnings come, the last day. Sell and then watch. If it is good, you buy again. There is no problem with that. Okay? Now, I do follow hot tech upgrades in the stock. It is still a meat to eat from. But understand, advanced trader, when they say it, it is already in the price. For example, after 4 o'clock, some analyst or broker, big broker, they announce that they upgrade. For example, I give you a concrete example, because when I give you this example, you will know. There is one group of analysts, a big broker, they downgrade Apple. When they downgrade Apple, it goes in a downtrend. No, it's a gap down. But it was the beginning of the market move. And I told my guys, after a few days, I tell Apple is a buy. And we have bought it and we have made a lot of money from Apple. Although these guys, they give a bad downgrade. I will show you the chart in order to see what I'm speaking about. So let's until we have the chart, because the chart comes late a little bit. So when I see the chart, I will begin to talk. It's always like this. Okay, you see the chart right now. Let's take Apple. Now I know maybe you can see it very well, because I can't the chart is but if you go here, if you go to this day, which is 3rd January 2019, it means last year on the third day, there is a gap down here. You can see it, a gap down. I know it's not you can see it from the screen, but I will give you the date. Go here on the 3rd of, it's Thursday, 3rd of January. There is a gap down here. Why? Because they downgrade. But when the stock begins to go up, I see the whole market going up, which is 26 December. I talked to you before when I say 2019 will be good because of the new trend, and we have been riding Apple all the trend here, and then we sold here, and then we begin here, and we are now until here. Guys who have been in my subscription, if they bought as I bought, and I showed them Apple at that time, and even if they go up, they bought, they must have made money, a lot of money in 2019. Okay? Now, let's see. Let's go back. This I showed you that even if they downgrade, it doesn't mean that the stock will collapse. It's just the news. But you should see after the news what happened. Okay? And you will never know. Because if it is known, if tomorrow they announce they upgrade Apple, for example, I will buy it today. It's very easy. You can make very easy money, but it's not the case. It's not the case. Because this is insider information. Insider information, it means some people, they know about it, but they have to obey the law, not to give the information. For example, let's say Apple will announce good earning news next week because they have the information. They have it. Do you know that if they give information to someone outside or they give it to people inside and they begin to buy, so the people, they see that they begin to buy, it means there is something which is wrong before the earnings. So what did happen? If the IRS know, it will do an investigation, and if they caught someone, it will be very bad for him. Okay? This is called insider trading. But in America here, it's forbidden to do insider trading. It was done before creating the Security Exchange Commission in 1934. Before that, the stock market was wild. It was wild. People, they give information in order to get money. The company can sell the information to a trader. They say, okay, we have an excellent earning news, so you might make a lot of money when the earning news comes. Because the traders, when they see earning news, they buy a lot. And you see a gap up. So you will get a gap up easily. 20%, 30%, 5%, or 50%. You put 100,000, you get next day 50,000. This is a big money. But this was done before 1934, before the creation of the Security Exchange Commission. Understand that. Now it is not allowed. If they catch someone, it will be very bad for her. Okay, let's continue. You don't know better than analysts, even big fund higher than analysts to tell which trend to follow and sectors are hot. Man, advanced trader, please. If they know, mutual fund, because analysts, they know, okay, follow analysts. Follow analysts. And they give you the best choice. You are wrong. Now they do just a bet. But they are the movers. Mutual funds are the movers of the market. Not the others they do. It's the movers. If the mutual fund begin to buy a stock, the stock will be going up and all the people will come and buy. This is how the trend begins. It's not they know, because analysts say they know. They don't. And if you see the forecasters, the analyst will never know the future. If he knows, he will put all his money, but they will put no money. Understand that and don't say something that is not true. If they know, how can you know the future? How can you know next month is Bank of America is going to double? How? From where do you know? It's people. It's live people. It's people that they buy. It's a human. You can't know for me what I buy next week. Can you know? You will never know what I buy. So how can you know the stock if it is going up or going down? So this idea that some people know, it's not true. But what they do, the mutual funds, they sell after 1 year or two. They should sell in order to buy other stocks. So they prefer to buy other industries and other sectors. That's why in the market you see always a sector that it is going good in 1 year or two. For me, I follow the sectors. Now, how do I know? Is when I see one sector is leading the whole market. Is almost all the stocks are going good in that sector, in those industries. That's why I go there and buy. Because I see it. It's not fundamental. Because the stock market is based not on investing. It's based on trading. When you see the trend, for example, for Apple, you see 2 trends or 3 trends last year. This, I discovered it by myself. It's just because I follow trends. It's not an analyst who tell me, buy Apple at that time. It's me. I don't care even if they say buy Apple or Facebook, I don't care. So this idea that some people know, it's false. But if you follow trends, you will see them. But mutual funds, they are the creator of trends. They create the trend. Because when they begin to buy a stock, they buy heavily. Okay? So when they buy heavily, the stock will go up because they buy a lot. Okay? And they don't buy in one day. They buy in 1 month or 2 months or 3 months. Because if they buy in one day, it will be a spike. How can mutual fund, they want to buy 500 million shares? He can't go to Facebook or Apple and buy it in one day. The stock from 200, it can go to 400 if they buy in one day. So they buy little by little, not to show his hand. And this is the secret of following trends. And this is what I am teaching. This is what I am teaching. And you tell me, analysts. Who are these stupid analysts that they advise you to buy this or that? If they say yes, I say, put your money in it. Do you know when you read analysts, when they put an article or they go into a TV, what they say? They say under that we don't own this stock and we are not buying this stock. This is why they say, because they say we only give you our opinion, because they are paid. Analysts are paid, but managers, the analysts, they can help him understand inside the company what's going on. If the company is having problems, they say, no, don't buy this because there are problems. They are having a lot of loans and there is one big shareholder, he sold all his shares. Don't buy this company. Yes, they can help him, but they will never know what will happen in the market. If someone knows he become a billionaire in 1 month, understand that. Don't tell people that some people know because they sleep and they see the stocks next year they go 200% or 300%. This is not true in the market. Okay? And you say to me, you don't know better than analysts. Yes, I'm telling you, I know better than analysts. Because I don't see the company. I see the price. If I bought a stock, I'm telling you the truth. See this. If I bought a stock, $10, it goes to $20 in a trend. I double my money. I don't see the company fundamentals. You understand that? I don't see. And maybe the analysts that downgrade Apple, they say Apple is not good to buy, and they downgrade it. I buy it. I did the opposite, and I tell my students to do the opposite. Some who believe what I say, they buy and they make money. But the people who think that Apple is, they say they downgrade it and they begin to read and they begin to go to TV and they say, oh, no, don't buy. They downgrade it. Apple is bad. Apple is bad. Do you see the chart for Apple in 2019? We were there with our students and we make money. And you are telling me analysts, they know? They downgraded these analysts. I give you the proof that these analysts, they know nothing. If they know something, you can't know the future. Understand that. This is period. But the trend, you can see it. You can follow it because it is something that it is going up. I can see it. I don't care why the people are buying. I don't care. Because I don't want a reason. The reason for me to buy is the stock going up. This is my strategy is based on price. It is not based on opinion of people. Now, if you follow my strategies, you will follow that I follow the price. That's why I can make money from trends. If you follow fundamentals, they say to you, this company is the best company in the world, but the stock is going down and you lose money. So it's not because only the company that it is good or it is making something. They say a lot of analysts make sense when they open their mouth. Of course, some of them don't hit the target. Yeah, man, listen. I'm telling you one thing. Analysts, because this I think you don't know. Analysts are hired by mutual funds and companies to say what they want to say. He is like the mouth. You see this? The mouth. They talk. They say, last year, Facebook has done 50%. So buy Facebook. Is this something that it is reliable? Last year, it is not next year. Maybe next year, the stock will collapse. Because some people are selling Facebook, they ask people, this guy who is an analyst, he is very well known. People, they listen to him. So what they say to him? They say that Facebook is good. Buy. Now you and the other people, because you watch analysts, you go and you buy because they give you reasons. They say to you, last year, Facebook has made 50% profits. This year, it can make 50 or 100%. Okay, buy it. Now, where is the guarantee? It's just an opinion. It's just an opinion. And then when you buy, the stock goes down and you lose your money. To whom you blame? You blame yourself or you blame the analyst? Analyst is just someone who said his opinion. It's just an opinion. Anyone's opinion. You can have your own opinion about company and you will be right. Okay? But this is all future. For us, we don't look for opinions. I don't rely on opinions or analysts what they say. I rely on the price movement. Okay? And I am an expert on price movement. I am not expert in fundamentals. You don't ask me, go and check this company if it is good or not. No. For me, I see the price. I say to you, yes, the company is good because the price is doing good. I don't care. I make money, and then if the stock goes down, I sell. So I have my profits, and I don't care about the company. That's why in trading, what do we say? We say, date a woman and never marry her. You understand? This is what you should understand, put your mind. We are doing trading. We are not doing investing. Now, advanced trader said all the market is rising now, even aerospace and energy. One last week, Trump trouble, all the market is rising. Yes, you see that? You see that Trump is in a problem and it is bad news in the market, but the stock market is going up. Do you understand that? In 2019, at the beginning, our government was shut down. The federal government was shut down, but the market has been doing so good, and I have put it in my videos. If you go to my videos, the first weeks of January, the first week, second week, third week, each live I speak about a strong market. Okay? So understand that we have history and we follow stocks. We are not doing magic here, or we are following that guy who tells you, follow this stock. No, we are not doing that. Advanced, let me see, what did he say? Okay. Listen, advanced trader, advanced trader, please, you are writing too much. Leave some space for other guys, because I have now it is 1:19. I should answer all the guys. So please, advanced trader, stop writing until I finish what you have written. You have written too much. Okay, what do you say to me? You said to me you criticize people who knows better than we. Okay, listen, advanced trader, I'll tell you this. If you think that other people are knowing better than me, please just stop watching me. Go to analyst and watch them and entertain yourself. This is what I tell you. Because for me here, I'm explaining to you for free my strategies and how I look to the market, and you are telling me you don't know, and you don't know better than people. So how you are thinking? You come to me to learn some new thing, and then you tell me that you criticize people. Yes, I criticize people because I give you examples. Okay? I give you examples and I show you that they don't know. And you are telling me that you don't know better than these guys. So what are you doing here? So I suggest to you, if you don't feel well, I'm not going to read all your stuff because you have written too much. I will stop reading your stuff because you piss me off. So I don't read your stuff. So stop writing. And I don't want to go further with what you write, because you are not polite anymore. But at first you begin to asking questions. I'm explaining my strategies, and then you change to criticize me. No one criticized me in my own house. I am here in my own house. You see that? This is my own house. You are a guest. I like guests. I like my friends. I like my students. But if you come to my home and you are behaving bad, I kick your ass from the house. Never come again. Go to some other analysts and have fun with them. Okay? So I'm not going to read what you have written. I will see my people what they are saying. Okay. Ray Modi, thank you very much, Ray Modi, for your question. He says, what are your thoughts about long-term option trading? Long-term. Yes, listen, options change a lot in the price because it is not like a stock. First, in the option, it's a leveraged means. What does it mean, leveraged? It means you control a lot of money with a small money. Because you control a big money with a small money, because, for example, I will give you an example. You want to buy a stock with $100, but you don't have $10,000 to buy 100 shares. Okay? Let's say you can buy it with $500. You can buy a contract, a call contract. This $500, if it is long, let's say it is 3 months or 6 months, understand that the value of your money is only $100 or $200, and $300 you buy time to stay. It means as if you are renting this. You are renting this option. You are renting. It means you pay just to stay. As they say, pay to stay or pay to play or whatever they say. So you are as if you are renting. If you should understand what is option. Option, the longer you stay, the longer you pay in what we call extensive value, which is time. Because you pay for the time. Okay, I will give you another thing. In stocks, you don't pay. For example, you buy Facebook for 1 year. Investment. You buy it for 1st January. You sold it for 31st December 2020. For example, this year. This is your investment. Now, are you going to pay for the stock because you bought it? No. That's why stocks are good. But what if you want 1 year? You will pay rent. I'm saying rent just to understand my example. Okay? To understand my example. It means this is called extrinsic value. Intrinsic value is the value of your option is only, let's say, $100. This is your value of the money of what you bought. But the 400 that you bought for 6 months, it is just for time to stay. Okay? But if the stock make a lot of money, let's say it was $10, it goes to $15, $20, yes, you might make money. You might make money. But understand that there is a big risk. If there is a gap down, for example, you can lose most of your money because of this gap down. Because the calculations, it is not the same. I'm telling you an example. If a stock goes $1, the option doesn't go $1. It's not the same. So you are comparing, for example, tomato with apples. You are comparing two different things. Although option relies on the stock, but the calculations is different. There are a lot of calculations. And the guys in Wall Street, they created options in order that you have less choice and you have less chance to make money. That's why most of the people who make options, most of the time they lose a lot of money. They lose all their money. It's just because the calculations is not right. For example, a stock. If it goes $1 up, you will make that $1, right? You will make it. For example, a stock is $100. Tomorrow it goes $1. How much you make if you buy 100 shares? You make $100. This is exact. You can take the commission. It's not a big deal. But you make this $100. In option, it is not. The market would make $1. You can get 50 cents, or you go 20 cents or 10 cents. It depends on the option value. If it is out of the money or in the money or at the money. Okay, so there are a lot of things you should understand. Okay, let's hope Ray Modi, I explained to you this, but you can send me an email. And you can check my training, which is how to buy and call and put options. I have two. I have one training in videos, and I have, I think, one into ebook, which is another one. But I didn't make videos, but there is another. If you want to check or send me an email, I will check the links. Let's see, another guy. Smith Patel. Is it worth investing in S&P 500 index funds in Roth IRA or 401k? I don't know if they have indexes, but the index, you get the average, and understand that the index, they take fees, and you will see how much fees they take. Most of the indexes they take, for example, which is an ETF. I will show you, Patel, in order to understand. What is this index? I will show you an example from our chart. So I will be waiting just a few minutes, and when the chart shows to you, I will explain the index for you guys who are interested. Maybe I have a training about ETFs, how to buy ETFs by ebook. You can send me an email, or you can check my website for ebooks. You will find it. Yes, this is the chart. I will show you the indexes. Yes, this is, for example, Dow Jones, DIA. for example, you want to buy a Dow Jones, S&P 500. This is S&P 500 SPY. SPY. Now you see that. Now I will take this. SPY is an ETF, which is an exchange traded fund, and it tracks S&P 500. Okay, so it means it is the same. It is like a stock, because ETF, it is like a stock. You can buy it, you can sell it short. When it's going down, you can sell it short, like here. When it's going down, you can sell it short. It's like a stock, okay? You can do whatever you want with an ETF, okay? But understand that this price that you see, they take some money from it because there are fees that you don't see them, but they have already taken them. And you are getting the average of 500 stocks. Now, what does it mean, 500 stocks in this S&P 500? It means there are 500 stocks. They sum it up all and they divide by 500, and they will give you this price, which is 331. So you are getting the average. You are not getting the best stocks in S&P 500. You are not getting the worst S&P 500 stocks, but you have the average of all stocks. So you understand right now? Now, if you want to, but understand there are fees. In 401k, if you buy SPY, which is a Dow Jones, you can buy Russell 2000, which is called IWM. There are other indexes. You can buy Dow Jones if you want, DIA. You can buy silver. This is silver. You can buy the ETF of silver. It's called SLV. It's like a stock. It gives you all the silver companies of silver, all of them. And it gives you the thing. Now you can do the gold if you want to. This is gold, GLD. Okay? It's an ETF. And you are following gold by investing in gold without buying real gold, okay? So I hope you understand this idea. Advanced trader, I don't read. Okay? You piss me off. I don't read your stuff. And it's better to go to your analysts. They know better than me. You should go there and find your answer. I'm not going to answer you, especially today. I become mad and you don't know me. If you are here, I can do something else. So please, I am here to express my opinion, to teach you something. That's why all my guys are here. All these guys that you see that are here, they are my friends, they are my students, they are some people I know, they send me emails, they are my friends. Now you come here, if you come as a guest or as a friend, you are accepted. But if you say something bad about me, here I will not tolerate. Okay? I will not tolerate. And you begin to write. I begin to answer your questions, explain, until you said to me that you don't know nothing. Analysts know better than you, and you criticize them. Okay. It's logical. You don't like someone, you don't follow him. Go follow some analysts in TV, get some entertainment, put some snack and some Coca-Cola, and watch analysts. They give you the best stuff. Just this. Hey Duna, how are you? Hi Duna, thank you very much for coming, but you come late. It's 1 hour 34 minutes. In 25 or 26 minutes I finish this live. So if you have some questions, please write. I think, okay. I think advanced trader. I'm telling you one thing. Advanced trader, you are spamming the chat because you write too much and you speak with everything. You are changing our subject. So please, if you want to listen to me, you stay here. If you don't want to listen, just go somewhere else. Because I have only 25 minutes and I will finish this thing. And I see what you are writing, but I'm not going to answer anything. But if I find something wrong, you say, I will ban you forever. Don't come to me anymore, okay? That's the deal. Go, you say, I can become a millionaire with only 2,000. What you are doing here? Become a millionaire with 2,000? Okay, just go. Do it. No problem with me. I hope you do it, though. Tony, you said, I remember watching of your old video. I think you mentioned something about companies. They can write anything on earning news because the Nasdaq can't check all the companies. No. They can. They can do some stuff because this has a relation with tax. They can do a lot of play, and the government, the IRS, cannot check 24,000 companies, the whole thing. Because what if they say they have money, the IRS go after them because they say they had money, so they pay tax. The executives, they pay tax, so they can't lie. So, for example, for you, let's say you have a business, you make $20,000 a year, but you say, no, I have made 100,000. Do you know what will happen to you? You say to them that you have made this money, but you don't. So what they do to you? They tax you on 100,000 because you tell them. And then you will know what will happen if you don't want to pay tax. You know what's happened to you. So there are some things that happen, but it's not a big deal. But for companies, they will know. The analysts, they know in the future, because there are some analysts they go deep into the company's fundamentals, not the price. They can't forecast the price. The price is about it trading, okay? But they can see what's wrong or what is good in a company. Yes, this is something you find. You go to fundamentals, you find, okay? So Tony. When I speak about companies, yes, they can say some lies, and in stock market sometimes these companies executives are charged with fraud because they say because if they say bad things, the stock will go down, and the company they have problems, and this executive they get fired. So you understand, they get fired. So they don't want to make the company look bad. Sometimes they do that, but not always. Because the company executives are a lot. And we have the shareholders, the big shareholders. They are in the meeting. When you invest in a company, they ask you to come. If you want to come to their place, and they will give you the information live. It means you go there if you are an investor. And they always send you a letter asking you to vote and to do. They give you some kind of vote. You should fill this paper and send it to them. You have a vote. You can vote for executive to be fired. You can, because they give you possibilities if you are not okay with the company. Okay, but understand that this is so complex, and anything related to money, there is greed. There are problems. Okay? But we don't go into these things because no one knows. No one knows if someone is lying. How do you know if the company is lying? How? They give you information. They give you the information. If they say to you, we don't make money, how can you say to them that they make money? How? You understand? So it's very hard. Okay. Ferrari for sale. Hello. Thank you very much for coming, but you should come earlier because we are at the end of this session. We begin at 9 p.m. Eastern Time, and we finish at 11. Now we are nearly 20 minutes and we finish. Mike L, how are you? Lighthouse Show, how are you? Thank you very much for coming. Mike, thank you very much for, he say thanks for the content. Thank you. Lighthouse Show say, I want to avoid penny stocks. What is the minimum price to avoid penny stocks? Okay. You ask a very good question. Okay. Penny stocks generally are stocks that are small, from $5 down. $5, $4, $30. But there are some stocks that are bigger, and they are considered penny stocks. Because penny stocks, what does this mean? It means it goes quick, up or down. Up and down. For example, a penny stock, when it goes 5%, 10% is normal. You go to penny stocks. For example, a penny stock is $1. Today, it goes from $1 in the morning to $1.10. So what does it mean? 10%. 10%. It's a big number. You put in the morning $10,000. At the end of the day, you make $1,000. Yes, you make it because it goes 10%. $10,000. You put it at 9:30. At 4 o'clock you sell. The stock is $1.10. You make 1,000. Is that possible? Yes, it's possible more than that. But there is a big risk. There is a big risk. What if the stock lose 10%? So penny stocks, they move with high percentage. 5, 4, 7, 10, 15 a day. So that's why some people, they like penny stocks, because there is a big risk but there is big profits. So you understand that? But there are some stocks that are 15, 20, and they are considered penny stock. For me, I consider them penny stocks because they move too fast. And this is the stocks that I like. For me, I like all the stocks. Penny stocks, $20, $100, $200, all the stocks, I like them. Because for me, it is how do they move? How much money can I make in 1 week, 2 weeks, 3 weeks? I have one stock that I showed my guys last week. I bought it and I showed it to them in my subscription. This week, I got 32%. I sold it. I sold half of it, and half of it, I will keep it for next week if the company goes good. Because they go too much. I don't expect 32% in 1 week, in 5 days. I expect 10%, 5%, 12%, 15%. But the stock has gone 32%. Do you know what does it mean, 32%? Do you know what does it mean, 32%? If you put in the stock $100,000, you are making in 1 week $32,000. This is what does it mean. So it depends on your money. Is your money big or is your money small? You can apply that. So if you don't like stocks that are volatile, you can go to stocks that doesn't move that good, like financials, insurance. You find the stock, it goes 1%, 0.50%. So even if it goes down, there is no big risk from these stocks. So you choose insurance. You see banks. You see rates. You can do that if you are scared. And trading is about risk. If you are scared, do just what you can do. Don't be stressed out. Don't buy a penny stock and at night you can't sleep because you put 10,000, you put 20,000, and tomorrow you don't know what will happen. So if you are scared, understand that this trade is not for you. You should be happy with the risk. You should know what you are doing. If I am into a stock, I know when to exit if it is wrong. But If I make money, it's good for me because I know the risk. So trading, basically, it's about risk. If you know how to you know how to buy, you know how to exit, this is called risk management. It means when you buy and the stock is going up, what is going to do? You just manage the risk. You don't do nothing. For me, my stocks, I go each day 5 minutes, less than 5 minutes. I open the chart, I see what does my stocks doing. There are some that are doing good, some they are doing not good. So I'll manage that. If stock is not good, is not doing good, is not making more money, I sell it and buy another one. If it is something good, I keep it. That is the deal. That is how. And I show this in my subscription. And we are doing good in our investing and in our trading account. And you will see me. When you see I buy something today, you will see in the video. It means it's not. It's a true trading. It's not something that it is like other people. They say to you, "Oh, last year I bought this and I make 100%." No, this is not true. So I make my students look by their own eyes what I'm doing. Now, if a stock is bad, I show to them that I bought it here, as you can see, but it doesn't do good. I sell it. It's trading. I don't know what will happen in the future, and all the people are like me. Okay, so we are here to make money, and we take risk because when you put money in the market, you are taking a risk. So if you don't want to take a risk, don't do trading or investing. Go do your job. Because job, it means you are paid like with your time. For example, you are an hourly rate. They say you are getting $15 an hour. Okay, you are working in a job. If you work 1 hour, I give you $15. 40 hours, I give you this. So it is counted. Okay? But the problem, even if you make good money, let's say you make $50 an hour or $100 if you are a doctor or whatever is money, but there is a life risk. You go to the work and get an accident and you die. So this is a risk. You see that? So risk is always there. Although you have a job, there is no risk in your job, but outside you can have a problem. So trading is about managing risk. Okay? So hope you understand this idea. Tony said, yeah, I got the idea. Thank you very much. Let's see here. So Lighthouse Show, I explained to you penny stocks and what is the risk and the other stocks. But understand that all the stocks, especially dangerous stocks, you can make a lot of money, but you lose a lot of money. Two kind of stocks. Stocks like drugs companies and technology companies. In earning news, you can make a lot of money with gap ups, but you can lose with gap down. So you should be careful when the earning comes. If you don't want to stay, you should exit. Okay? So try to understand this thing. And always in my subscription, when I explain to them to buy a stock, I said, please look at the earning news if it's not this week. The earning news should be 2 months, 1 month, 2 months, or 3 months, in order that you trade easily without having gap ups and gap down. This is a precaution you do. If the stock you bought it today, and today is the earning news, so tomorrow maybe you have a gap down and you lose a lot of money. So why you do that? So it is just gambling. So this is not trading. This is gambling. Smith Patel said, are you able to do live streaming 2 times a week? This is very helpful. For now, I am trying. Listen, I'm trying to. I do it only once for many years. I might do one in Facebook. I have a group, a public group. If I made another one another day, I will tell you guys. I will announce it, and it should be a different subject. At least I will not say the same thing in the same week. I can't do that. Because understand that for me, I'm just here working for free. I just give free information, and it's just like a hangout. It's not really training people, but I'm just giving. But I have my students and my thing. We are doing. It means I give them information, and if there is something in the market, it's a lot of stuff. So I am with those and with here. So it's just a little bit. But I can't promise you two things. I have been doing this for many years, and I even stopped doing a lot of videos before I do a video for each day. But this is too much. It's too much for me. It's too much work. Okay. Smith Patel, if I do Facebook live, I will let you know. At least you can have two in the future. Wiseman said, Smith, he's very down to earth. In other words, Karim is honest. Thank you very much, Wiseman. You know me better than myself, maybe. Mike L said, good explanation of risk. Thanks. Yes, but now we have 9 minutes. I will speak now about trading. Trading, you can do scalping, which is doing trades that are in few minutes. When you see something, you see news, you see something, and you open your chart, you see the stock is beginning to go up very, very quick. You just buy. You don't have to understand anything because you don't know, and no one knows. Because when you go to search for the news, the stock has already gone up. So you don't. For me, I don't see the news when I was a day trader. I always see in the morning what's going on. It means when the market opens, I see. Before I see some news, if there is any big news, like they say, like anything that it is very, very important, then I don't buy until I open the 9:30 when the market opens, and then I look. If I see that the stock begin to go up, I just buy and wait. This, if it is very, very short, this is called scalping. Scalping, this is it. There is what we call day trading. Day trading, you day trade at any time. The normal day begins from 9:30 to 4. This is the normal day. But there are other times that you can trade, like what we call pre-hours and after hours. Pre-hours are from 4 a.m. to 9:30 a.m. It means the whole morning. Sometimes we have news. If you see the news, let's say Facebook in the early morning at 6 o'clock, the company announced something good that the users has acquired in this month or this 3 months. They double the users of Facebook. It's a good news. So you see the stock begin to go up very quick. So you should go and buy with them. This is a day trader. He should use news. He should use anything that helps him make the money. Because without the news, stocks, they go up and down. But you will never know which stocks. How many stocks we have? We have 24,000 stocks, ETFs, and mutual fund. How do you know that today Apple will go 10%? How? But you should see it in the news, okay? So when you see it in the news, you grab this news and you go to the chart. But you should first see your broker, if it is open from 4 a.m. to 8 p.m. Because some brokers know, they don't let you go in. But you see the news at 6, but they open at 8. They can't let you buy and sell stocks. And the news is at 6 o'clock, but they open at 8. So you see the stock is going up into your chart, But you can't sell, you can't buy. This is stupid. So if you are a day trader, you should go to a platform that lets you trade from 4 a.m. to 8 p.m. Because 8 p.m., why is that? Because after hours, sometimes we have earning news after the market close at 5 o'clock or 6 o'clock. Let's say the company, they don't say the time. Let's say they see at 6 o'clock. 6 o'clock they announce the news. But your broker, at 5 o'clock, they will not let you buy and sell. So, you will not be a day trader because you miss a lot of information. You miss to buy and sell at that time. And understand that the day trader, something good in day trading is that you can apply the margin. It means you have 10,000, your broker will give you 10,000 to use without paying interest rate. And this is something good. Interest rate means you don't pay. For example, you have 10,000. The broker gives you 10,000, so you have a margin account. So you can buy $20,000 stocks, shares of stocks. So you have the buying power has doubled for you. You have 50,000, he give you 50,000. So you have 100,000. So you can move good. You can make a lot of money if you are a good trader. Now, if you are a swing trader, it's good not to use margin account. It's not good not because they will charge you interest rate. Because they give you a loan. If you stay one night, they will begin to charge you 6%, 7%, 10%. So when you choose, if you are using the margin account for many days, like a swing trading, you should find a broker that interest rate is so small, like 4%, 3%, 5%. Don't go with 10% or 15%. They will rip you off. Even if you make profit, they will rip you off. So understand that. Okay? So right now we have only 3 minutes to finish. I will continue and answer questions. Wiseman said, trading, you don't have to worry about a stock market crash. That is, if the person knows and what they are doing. Yes, it means if the stock market is doing bad, this is the feast of day traders. You can join them. You can, in the day you see everything is collapsing, so you sell short. In your swing trading, you sell short. But let's say you do day trade, and you make money. What's wrong with it? You make money. Anything is going down, you sell short. You make money because you follow the day traders. Okay. Tony is I think the last question is Tony. Can you tell us someday at what age you started trading and what made you start trading in the stock market? Maybe in the future video or stream. Now, for me, before I come to America old, it means I am an old guy. I'm not a young guy. I don't come in my 20s or 30s. I come old. Now, when I immigrate here, like a legal immigrant, and begin to work and to see, I have an idea about companies, about investing. I have ideas, but I have never done it. In 2010, I get interested, so I go to YouTube and I begin to learn. What is this day trading? What is investing? It means, I thought before, I will tell you the truth, before when I was young, before I trade, before I do anything in investment, I thought that you buy a share of a company, it must go up, you make profit. But I don't know that you can lose money also. But hopefully I didn't make investing at first because I don't have money. So I begin with trading. So trading, I do mit and hiss, what you call what is it called? Hit and miss strategy. hit and miss strategy, it means you go online and you read books and you apply any strategy. Do this, it doesn't work. Do this, it doesn't work. I lose money. I sometimes make money. I sometimes lose money. I go to investing, I read books, and they say, do this. I did what they told me. And then I did it in virtual. I bought stocks as they told me, and after 1 year, I find that I lose money in all the stocks. So I said to myself, they tell me wrong things. So I begin to search by myself again and again. And anything I find it works, I should know why it works. Until I come up with my strategies, and I don't begin to teach until 2015 or 16. I just, many years I was profitable. And then I begin to trade. I begin to teach people trading. And I make my training available for people. But before, I don't. I just do it myself. And this is how I begin. So I begin old. If I come here 20s and I begin investing, begin trading, it could be better for me. But I am okay. But this is something that I can't change in my life because I come here late. In my country that I was in, they don't have stock market. They have stock market with 6 stocks. If you want to buy, you don't know the price. 6 companies only, and you should send them a letter. You say, I want to buy 100 shares of this company, and you send them a letter. You wait 2 months or 3 months. They tell you how much and how much you should pay, and you send them a check. It means what? It means this is not investment. This is not investing, because we don't know even what the companies are doing or how much they make money or so. So, top series have a question. How much money did you make trading? No, I will not tell you how much. But the first year, I begin with 18,000. I make it to I think 62,000 in 6 months. This is the beginning. Now the first I lost my money. I put 12,000. I lost around 10,000 at the beginning when I begin to do my experiment. It lasts about 8 months, or I lost money. But I begin to review my trades and see what makes me, why I am losing money. This I begin to make my strategy until I begin to make money, and then I have saved a lot of money, and I begin with 18,000. In 6 months, I make it like 62,000, and then I continue to trade each year successfully. This is what I made, and then I begin to make investment. It's not a big investment, but I want to look. The company that I like at that time was, I don't know to choose. For example, drug companies or technology companies, because I don't know. At the time, I just begin to learn. So I bought Costco. I bought it at 85. Now it is around 300. So in these 3 years or 4 years, I make like 300% of my money or more, because I bought it at 85. It goes to 300. So this is how I made my money. But in order to tell you how much I made, I will not tell you. This is private. I am not a company to give you public what's in my profits. I'm not. It's just a private thing. Okay? But this is, guys, what I do. It's 2 hours 3 minutes, guys. And thank you very much, guys, for being here and for your excellent questions. Except for this advanced trader who makes me mad, and hope next time he will not make me mad, because I will ban him if he made the same mistake. So, but I forgive people. So for me, I am just hanging out here with my friends and with my students. I am not here to argue with people. If you have a different opinion, it's okay. But the only thing I don't like, if someone tells me you don't understand anything, or you are criticizing people because you don't know, they know better than you. So here, this kind of remarks is bad, because for me, I'm just helping you guys with my opinions. Now, if you know better, or you follow someone better than me, okay, I don't mind. Just go, open the door, go wherever you want. Okay. So thank you very much. Now, thank you very much. Top Series said, yes, wise men, some people are rude. For me, I don't like rude people. That's why I don't like them. So Top Series says, any thoughts on Bitcoin? So I will give you, because he asked. Now this is the last question I answer. This is the last question I answer. I will go to what is it called? I will go to see Bitcoins because he asked me for Bitcoins, but I will not stay more. I will just answer this and I will say to you goodbye. I think it's Coinbase, the website. Yes, Coinbase. Let me see Bitcoin. It's 9,000. Now it asks me to do an account. I don't want to do an account. So I don't know where I find the chart. But today it goes 2.90. Understand that Bitcoin. Let me see Bitcoin. Maybe I can find a chart, guys. Let me find a chart. Yes, I find here a chart. Let me see 1 year. So let me see if it gives me the chart. Oh yes, it gives me here a chart. In 24 hours, some people who bought it like in 24 hours, they make 257. Now let's see 1 month. 1 month, for example, it goes from 6,900. Let's say it is 7,000. Now it is 900. In 1 month, you can make $2,000. Now, why is that? Because Bitcoin is like penny stocks. It goes very, very quick up. It goes very, very down. So be careful. Be careful, guys, of Bitcoin. And you should be a trader. You should go long, and you should go short. So you should be a trader. You can be an investor. Not investor. You can be an investor or swing trader also, because you bought it here at let's say at 6,000, 7,000, 8,000. Here like 7,800. Like here 7,900. And now it's 9,140. So you are making money, okay? So you can do that with my strategy. You can do that because you just follow the trend. So you should know where to buy, when to sell. That's it. Okay? So let's stop this. So let's I see you, and then I can say to you goodbye and see you next week. For my students, I have already sent them the search and the trading account and the investing account. For those who are not my students, next week we will make another live. If I make in let's say in Facebook, I want to make the same one as in Facebook. I have never made there, but I will try. Maybe you whenever you have time, you can come the other side. But I try to see the best time to do, because sometimes at night, it depends on the people. Sometimes it's good for them. Sometimes it is not, because they work or they are sleeping. It depends. Okay. So guys, thank you very much for watching, and see you next